Right, I'm going to make a quick video on how to use ByBit doing longs and shorts on a 5-minute time frame. So I used to trade 5 minutes, I still do. You know, when you have an hour to spare, there's no reason why you can't sit down and make a little bit of money. It doesn't matter really which way the market's going, as long as you employ a few rules for yourself. There's no reason why you can't make a little bit of money. But before you even start, let me just tell you that the odds are going to be stacked against you massively. If you've never done margin trading before, just let me tell you now that it's 90% likely that you're going to lose money to start with, which is why I suggest if you are going to do this, you have a very small margin account, you use a 1x only, and you practice for as long as possible. Really, don't get tempted to go using all these massive leverages, you know, because you will lose a lot more money a lot quicker. So just a quick overview. I've only got a little bit of EOS in here, about 100 EOS or so. I have the opportunity to put 20%, 25%, 50%, 70% or 100% of my entire margin account, which only equates to just short of $300, so it's not much at all. If I did that at a 1x, it means that every tick up, I basically just essentially double the value of it, because not only is my EOS that I own going up in value as it goes up, but I also accumulate a little bit more on top. It would only be a very small amount though, but that's fine. That's fine. Any gain is good. But if it were to go down, I would be losing my actual EOS. It would be going down in value, clearly, but more importantly, I would actually be having to lose the amount of EOS I've got in my margin account. Okay, so all the 95 EOS that I've got, let's just say if we lost 10% down, if it dropped by 10%, I would lose 10% of this, so it would actually be down almost about 10, just short 10 EOS. So like I say, there's a few things you need to bear in mind when you do these trades. So first of all, the first thing you need to be aware of is that there's a thing in trading which is called 90-90-90, which means that 90% of traders will lose 90% of their margin account within 90 days. And that's something that actually does happen. So like I say, the odds are definitely against you when you're starting this, but there's, you know, like I say, with practice and with discipline, there's no reason why you can't, you know, be in that 10%. So, you know, if you're new to trading in general, you know, I would really urge you to sort of work out certain indicators. The most important ones that I use, just in general, are the MACD and just some basic moving averages plus the Bollinger Bands. Also, because I'm trading EOS, I've got Bitcoin on another page, because Bitcoin is often an indicator in itself as to the general direction of the market with an altcoin. So if I was looking to buy this, okay, because it looks like for the last 6 hours we've been going up, and there's a few indicators to suggest that we're going to continue to go up perhaps, we'll be pressing buy long. Okay, I'd say let's just do 25% of my entire account, and I would press buy long at 1x leverage, which won't give me much profit at all, but it will give me some, but it won't give me much. So press buy long, and brings up this little page here. This is where you decide whether it is that you want to automatically take profit at a certain level. Now, I would say you definitely want to do this. It's very tempting because people, by their very nature, are greedy, and you will start to see the profits rolling in, and you can't help yourself but say a little more, a little more, a little more. That's not the way to do it, because like I say, if we're trading a 5-minute time frame here, we want to be in and out as fast as possible, really. So a realistic area to buy this at isn't where it is right now. You don't want to chase a green candle at the top of a Bollinger Band. If you don't know what a Bollinger Band is, it's basically this little blue area here that I would suggest you put up as an indicator of whether candles are going to remain, and about 95% of the time the candles remain within the Bollinger Band. So every time there's a breakout of there, it finds its way back in most of the time, and it will stay in here around roughly about 90% of the time. So even though we've got bullish indicators going on here, it would be too risky to be buying it at the top of a Bollinger Band. I'm not saying that this can't rocket right up. I mean, it can do. You can see a big candle up there, but also, you know, that was just a wick. It came straight back down again, and we had a continuation all the way down to the bottom of the Bollinger Band. Same again here. This looked like it was going to be a big sell-off. We had a big spike down there. That might trick some people into thinking we're going to continue to go down, but actually no, it's counterintuitive. It bounced back up and came all the way back up to the top. So the way that a Bollinger Band would work is that we move from top to bottom, we also have a centre of the Bollinger Band marked out here, which is this red line here, if you can see within the middle of it, and sometimes we can be rejected from it, and sometimes we can find support from it. We also have support on other moving averages, and the reason I have the green 50 exponential and the white 200 exponential is because I often find that we do find support on those quite frequently, as well as the Bollinger Band itself. You can see that taking place here. That was the middle of the Bollinger Band here, but on this occasion we broke through the Bollinger Band in the centre and actually got supported on the white 200 exponential. Again, you could suggest that that was a mixture of the bottom of the Bollinger Band and the white exponential. That was the white exponential. And we broke above the Bollinger Band centre here, and we've now being rejected from the top. So what's likely to happen here as we speak at this very moment is that we probably will find a continuation up, which to me would be too risky for me to actually place along here, even though that there is potential of making money on the way up, because it does look as though there is more room to move up. But when we look out and zoom out a little bit further, what we do see is that even though for the last 6 hours we have been moving up, we've been moving down for a lot longer than that, and I would expect that we will be moving down even more over time. So this candle could find its way down to the middle of the Bollinger Band. It could be supported at the green 50. It could also be supported at the white 200, or it could come back down all the way back down to the bottom of the Bollinger Band. So right now it's very risky. It's not worth placing a long. It's also not worth placing a short, because what we see is for the last 6 hours we've been making big moves, actually quite significant moves up for a 5-minute time frame, that would be. So right now it's a matter of waiting to see what happens. Ideally what I'd like to see would be this indicator here, this MACD indicator, turn around, make a cross, and then go beneath the 0 point here with a spread which would be the inverse of this, a nice distance between the two of them, beneath the 0 point here, looking a little bit more like this, but actually being underneath this 0 point here. That would be a good indicator for me, and to see if this green 50 exponential crosses over this white one. If I had those two indicators together doing the same thing that I've just mentioned, so that crossing that one and this one crossing that one and being beneath here, and being at a reasonable level, perhaps maybe at the centre of the Bollinger Band, it might be okay to place a sell order, which would be making money on the way down. So what I would do if that were to take place, so let's just imagine that this is where we are, we're down here and we have that here, we'd do exactly the opposite. Instead of buying long, we sell short, and we have our indicators here. So I'd take my profit. Where would I like to take my profit? Well, to be safe, I would probably say the way that this is looking now, I'd want to take my profit just above this area here. So I'd put in 2926. Don't forget the decimals. So 2.29. Oop, that's not right. 2.926. So I'd make a very small amount, a tiny amount, because I'm only doing a small leveraged short there. Again, at the same time, while doing that, I would want to make sure that I have a very tight stop loss in. So my stop loss would be probably just above where these last candles have been rejected from. So that would be 2.9977. That means that if it spikes above there, yes, I do lose money, but if it makes a continuation, it would I wouldn't lose as much as I need to. And even me, that does this all the time, almost every day, I still get it wrong about 75 to 80% of the time, which is pretty. I've got to say that's a pretty good hit rate, generally speaking. So that's how generally you would use this platform, ByBit, and that's the way that you would do your risk management. So make sure you have a tight stop loss in, be prepared to lose some, have a sell order, an automatic sell order. That way you lock in profits at a reasonable level, unless of course you think you've got a fix on something where you believe that it's going to go down a lot lower. But by doing that, what I would suggest is you really need to sit and wait for the most appropriate time to either put a long or a short in, because you want to try and find it. If you're doing a short sell, you want to be shorting it at what you would think is almost certainly going to be the highest point, because your stop loss is likely to be triggered because it waves around and it's very volatile. You can make those calls obviously, but I would always say get your stop loss in and be prepared to lose out. And it's that sort of gambling mentality, that sort of hoping for the best, that will probably trigger your stop loss. If you're realistic about where you want to make your money, you'd also put a sell order in as well. And yeah, I do it all the time, and I see it go, and let's just say I miss out on sometimes a considerable amount of money. But the thing I always like to remind myself is that I did make money and I didn't lose it. So that is the thing to hold on to. If you're always making money, that's the key. So long as you're not losing money, and by losing money, it's you've got to be disciplined. It's yourself. It's the greed within yourself that will make you lose the money, because you'll always be waiting to make more, hoping that candle will go lower and lower and lower, and then before you know it, it's rebounded all the way back up, and you've lost out on not only where you could have sold it at, but you've actually lost some of your actual margin overall. So like I say, remember, the odds are stacked against you when you're doing margin trading. There's only 10% likely that you're going to be in that little 10% category of successful traders. So just very briefly, you need to make sure that you have a tight stop loss. You need to make sure that you have a sell order, so automatically selling at where you think is going to be the most realistic area where it's going to be triggered. Don't do more than 1 or 2%, 2x leverage to start with. That 2x leverage is quite a lot, and it doesn't sound a lot, but it is quite a lot. Don't get greedy and go crazy on the leverage amounts. Be disciplined with those rules. And the other rule is make sure that when you are placing any kind of position, that you can justify to yourself why you're doing it. Almost have a conversation with yourself saying, am I doing this because I think it's going to go down, or am I pretty sure it's going to go down from this level? Is this the highest level it's going to go before it falls down, or do I honestly think that it could go up any further? And if you can't justify that to yourself, then don't place the trade. There's no reason for you to. There's nothing worse than losing money. Okay, there's nothing worse than just losing some of your margin account, because there will always be opportunities. It might not happen when you're sitting down at that computer that time at that very point, but there will be an opportunity which is a lot more obvious to you, maybe tomorrow or later on that day or the following week, where you could make a lot of money. And there's nothing worse than losing your margin account, and then, like I say, and the very next day the perfect opportunity comes about, and you just think to yourself, this one is obvious to me, this one looks like I could have made some good money on it, but unfortunately I lost all my margin account and I can't do it. So like I say, it is a difficult one, but like I say, it can be very lucrative. And just in the last 6 weeks or so, I quadrupled my margin account just on EOS from shorting it. Well, I was buying it and shorting it, to be honest with you, but I've made the vast majority of my gains from shorting the market, and at the moment I believe we are in a downwards trend and we still got some further to go. So I would be more inclined to continue shorting this market for probably the next few weeks at least. It doesn't mean you can't place longs. This would have been a good long to buy, but the indicators at this point didn't really look very good to me. At this point I wouldn't have done it. Like I say, I would suggest maybe look at some videos. I'll make some videos myself on certain indicators, especially for trading 5-minute charts. Anyway, I'll leave it with you there. This, like I say, wasn't an opportunity for me to place a trade on this video, which is a shame. I'll see if I can make one at some point in the future. But like I say, it's about balancing your risk and your reward together. And at the moment, as we're speaking right now, it looks as though that setup might be coming into play that I mentioned, where we have this cross here forming and then going back beneath this 0 point. That would also in turn make this curve round and maybe have a continuation, and then we could perhaps maybe look at riding that all the way down to maybe these levels here, if you had a good entry point. But at the moment, this is still a bullish setup in the very short term, even though it's likely to come back down to the center of this Bollinger Band here. So there is money to be made on the way down, but the indicators tell me that it's more that there is a very strong possibility for it to just ricochet at any of these moving averages and go right back up again. So, like I say, It's not for the faint-hearted, and it's for the patient people, the people who enjoy strategy. It's not for those people who are gamblers or whatever. And if you are going to do this for the first time, try and set up a practice account, or just do a very don't put much in. Don't have more than $100 worth in, and just use a 1x leverage and just get the hang of it and practice for as long as possible. Really, don't go crazy on it. There is a lot of money to be made, but there's as much money to be lost as well. Thanks for watching, and I hope that was in some way useful for you. I know it was a lot of rambling, but like I say, there is an enormous amount of risk involved in doing margin trading, and like I say, the odds are stacked against you when you're doing this sort of thing. Anyway, I'll leave a little link for you to set up a ByBit or Bitmax account in the description below, so feel free to follow that link, and I hope you have a nice day and good luck to you.